Welcome, nice to see you again. Today I made another change to my portfolio because I talked with a friend and his dad. He has, around 50 years, so a lot of experience on the stock market. He's more of a trader rather than a fundamental investor. However, he also looks at the financials. But he told me about that he heard that I like to hold my positions for a very long time, which is partially true because I only hold the positions that are of the highest quality for a long period of time. However, if I buy something that is cheap and then it goes up in price, then I tend to sell. And something like this happened to United Health Group. And I still have some stocks bought through my retirement account. So there I'm more eager to sell because I will not pay taxes on that money. So I was buying at around $250, $300. So right now from the bottom, it is around 40% increase, 40% gain, which is very, very nice. So what I was thinking is that I should reduce and buy something else. If I had everything on my retirement account, then I would sell 100% of this. However, right now I'm a little bit torn apart whether to realize profit, like my friend's dad suggested, a little bit more aggressive than I used to. I know the math behind compound investing and that taxes matter, but holding better investments is also a significant thing there. And also remember, after a significant, for me in terms of percentages, price increase on this investment, I feel more optimistic about it, while in reality I maybe should feel a little bit more pessimistic because this company has problems with operating cash flows. Therefore, I will sell it and I will change it into some of the companies that Lilo is buying, like Tencent Music Entertainment, for instance. And here, let's look at the valuation. It should look better than how it did on United Health that I looked previously. And here you can see, okay, this is above. The blue one is the price, right? So you can see all of the financials are above the blue price. So we don't see this crash in operating cash flows like we saw in United Health. In here, this is way more stable and above, so it looks better. Let's look at Pinduoduo, another thing that Lilo is buying, and currently it's below his purchase price. Therefore, we can look at the valuation. Here also look great margins. Return on invested capital is like 16%, but return on assets 16%, return on equity 25%, so it's also great. Looking here at the valuation, yeah, we can see that the price is far below the operational activity. However, we can see huge slowdown in growth in operating cash flows. That's the most significant one. And also let's look at the financials here. I want to look at cash flow statement especially. So yes, sadly they are not buying back their stock. They are generating a lot of money. Yeah, the ending cash position grows very rapidly. What is the price to book value ratio on this company? Because this will determine the quality. 1.77. Okay, so it's not that bad. What was it on the Tencent Music? 1.2. And here we have the growth stage, it looks like, on this company. Maybe we'll see bigger investments. Let me check it out. It should be on the cash flow statement. It's laggy. I have a lot of tabs open. All right. No investments here. And some repurchase of stock, although not in recent quarters at least. And lastly, Adobe. This is the one that I like a lot. Oh, did I close it? I think I did. Right, so let's look at financials for Adobe. We see huge profitability, financial strength, everything, and amazing growth with the price to earnings ratio of 11. Let's look. I would like to see price to operating income, price to operating cash flows, that's an 8, price to sales of 3, everything is green compared to historical averages. All right, let's look at the financials. The growth is around 20%, 15%. This is great. However, there might be some problems with AI. However, I think Adobe is a technological company, therefore they will be the AI themselves and can benefit on it. All right, let's check the valuation ratios. Yeah, price to earnings is much lower than it was previously. I want to look at operating margins, 36%. Okay, this looks very good. Revenue, 25 billion. Then gross profit, 22 billion. Wow, that's amazing. Some for research and development and a lot of selling general administrative. It brings the total operating income lower and operating margin is 36%. Although I don't know how stock-based compensation is calculated into that. Alright, let's look at the cash flow statement. That's the one that interests me the most. So the cash should be piling in, but they are doing repurchase of stock. Yeah, it looks amazing. I love repurchases of stocks. So yeah, I'm thinking about selling United Health and buying one of the other ones. Because at the current price, I think it just brings more value. I was also thinking about selling this company, this Polish company. They are doing some acquisitions, etc. But it's nothing big. Just a tiny increase in financials, while there are pressures and there is a price war. Something that I was hopeful not to see, but it is here, and there's nothing I can really do about it.